Afternoon, everyone. This is Trader Tim from over at eminimine.com. Today's Monday, the 9th of March, 2020, doing a market analysis for the ES and trade recap. I first want to start with the larger daily chart. And, looking at this chart, it should be no surprise, at least I wasn't surprised this morning, or last night really, to see us gapping down to this kind of 27, 26 area, because that is the negative 23% target of the halfway back short from 31.21s that traded last week. That was a pretty clean touch, and we had a pretty strong reaction off that level. So seeing as the long traded first, if I zoom out a little bit, we can see the larger halfway back long trading. And with that in mind, that the long touched first, buyers, including myself, I bought down here with a in my longer term position or longer term account, added to some long term positions down here. And when the long trades first, we trade up into the short, and then we make our way down and start breaking through the swing low, that yields a big opportunity for bears to kind of capitalize on the stops of those new positions. I did not sell out of my longer term position just because it's a long only position in that case, but doing things intraday or by nature of swing trading, to hedge some of those longer term positions, you don't have to close out of that longer term position. You can reap the benefits of the dividends, reinvest, buy more shares, and whether it's 2 months from now or 2 years from now, when we return to new highs in the market, the account balance is going to be quite a bit higher than it is than it was the last time you were up at that level. Now, seeing that we're at the negative 23% target, if I draw the next retracement from highs to lows, that's a 29.26, and we should be looking for a move up to 29.26 as the next potential resistance point. That could come in the form of a gap tomorrow, or just kind of a strong rally to that level. A couple things to note: on the gap down, or at least on this move down, we filled our last two gaps, 28.23.75, that was up here, and then the last one, 27.63.75, that was kind of down right around near where we closed. So since we don't have any more unfilled gaps below us now, we started creating these unfilled gaps above us, and you end up with sort of a similar scenario where we can, those gaps will be filled, and it could be 6 months from now, but keep those on a post-it, all of these unfilled gaps here, or written down someplace, because when we start to rally, those points will become magnets. And when we do start that rally, we typically start blowing through or filling those gaps kind of in succession, kind of as we did on the way down. So keep those in mind for the future. As far as trades go, I want to talk about a trade from Friday in the ES. Swing trading on the micro ES is a viable option. You can do it on a daily chart, but coming into a 15-minute chart is a little bit better, just because you can shrink the ranges a little bit more than the daily chart. In terms of options, you're going to be paying a premium, so typically in higher volatile times like this, the directional options are not as appealing. And then the one other thing I wanted to bring up is, if we go to the larger time frame, monthly S&P, and we see this, monster, horrific, end of world sell-off that we're in, at least according to the media, we start zooming out and we say, okay, well, this pullback takes us to about where we were at the end of 2018. Actually, we're not even as low as the end of 2018. Um, but we zoom out a little bit more, we start to see, oh wow, that's look at this uptrend, higher low, higher low, higher low, higher low. Wow, we're still in an uptrend even with this end of world doomsday situation that the CNBC is putting us in. And you come back to 2000, 2008, and you look at just eyeballing, okay, 50% decline, 1600 down to 800, basically happening twice into 2000 and in 2008. Then you come up here and you say, okay, well, a 3400, and now we're sitting at, even let's just say it went to 2400. I mean, that's still not even half of the S&P, not even close. So keep things in perspective. Don't get caught up in the the day-to-day news media hype and all that garbage. There are some serious things happening with the deaths of folks with the coronavirus, but from a trading perspective and from a long-term investing perspective, there's no need to sell the farm, sell all your investments, and go live in a cave somewhere. I would argue the contrary. Taking this opportunity to buy up some longer term positions is really going to reap dividends, so to speak, and set you up very nicely for. I mean, you wait for these kind of situations. You love these kind of situations, these pullback opportunities. You're building capital, making money, all along this run up, and you wait for these big opportunities for the market to just dive off a cliff and buy up at huge discounts. The only stock swing trade short that I have is BNFT. That's really the only one that I've had for the last week or couple of weeks now. And so that's just kind of hanging out down around the $10 mark. As soon as it breaks a prior day's high, as long as it's beyond the first 15 minutes, then I'll finish closing that one out. Other than that, day trade wise, let's go to the trade from Friday. I came in today with the intention of not taking any trades because the VIX was very, very high. And that's exactly what I did today, no trades. But on Friday, we traded. So if I go to the 15-minute chart, we'll look at a couple of things here. We traded from one of the nice things about the 15-minute chart is it gives you a good sense of the trend without giving you a whole bunch of noise. So when I start the day, you can, sometimes I'll use the 30-minute, but the 15-minute is just as good. And if we look at the afternoon's high to the morning's low, you can kind of continue on the trend across the days, and a lot of these days have been gaps. So that gives us an idea of, okay, this is about the halfway point between roughly the open from Friday and then the close from Thursday. And that could act as a resistance point, 29.68-ish. And so rather than fret about trying to trade, all through the run up and pick a top, kind of starting with this bigger time frame, this bigger halfway back as a potential resistance point, and looking at that as, okay, that's an area that I want to look for trades. So as the market kind of came up to this level, around 29.68, I'm looking for us to break a swing low. So you see potential resistance as we stop at that level. And then you start to see us changing direction, changing trend, where we break the swing low, and then we end up breaking the 61.8, and then we set up in the first short in the new trend. And I actually I tweeted about this on Friday. It was something I don't do a lot of, but it was a great setup, and just felt like sharing it. So that was a great short setup, and we dove pretty quickly and fell I mean, this doesn't look like much, but this is 15 points, and over a pretty quick time frame, and just by trailing the swing highs here, and as we really start to go quickly, I'm just kind of trailing my stop above roughly each candle a couple of ticks. I mean, even a point above it's moving pretty quickly, so you just kind of eyeball it and drag your stop down. Then I got taken out, around this area. I wasn't able to, get my stop right above this candle before we it bounced and started to move higher. But that's the way that I'll use the larger time frames to determine the area that I want to put on my trades or look for trade setups. And that's a way to filter out some of the noise or the other movements that you might get. You can certainly come in and just take any swing low to swing high on the 512, and you'll likely get a reaction, get a first target at least, and then maybe you'll be able to catch a nice run up or a sell off. But when we get into these super volatile times, it's there's a whole lot of setups that pop up because there's so much activity, and this is a good way to help filter out, slow things down, and just kind of add some clarity to what can be a little bit of a chaotic situation. So if the VIX is typically above about 35, I don't like to day trade. Friday we were in kind of like we were around 34, I believe, 33, 34, and then we kind of rallied above that into the afternoon. But yeah, so we've got gaps that have been filled, and now we've got new gaps that have started to unfold above us. So it wouldn't be surprising if we gap up tomorrow, monster up day, take us this week even to 29.26, and we'll see if we get another rollover from there. But no harm in sitting on your hands during this kind of a time. There's not a ton of stock swing trades happening in this time either, but I have been getting a lot of questions about swing trading stocks, and so I thought I would do a master class here probably in April, and we'll just run through the whole strategy start to finish, how I pick stocks and go through the watch list, set that up, and then how I place the trades and manage them and all that. So stay tuned for details on that. And yeah, if we kind of get a little bit of a retraction in vol, maybe down, closer to the 35 level, which wouldn't take much. I mean, a little bit of an up move here, and we could see a 20-point drop in the VIX. So if that happens, I'll be looking for some day trades this week. Otherwise, what do we got? Next Fed meeting is next Wednesday. So between now and then, not that I'm expecting the Fed to have a huge impact on an immediate rebound, but that's on the horizon, so keep that in mind. We will be doing a live trading session tomorrow. You can check that out, eminymine.com/VIP. If if I'm decide that I'm not going to place any day trades, there's plenty of stuff that we'll talk about and run through and kind of walk you through my thought process and whatnot. And if you have questions, feel free to leave them in the comments below. Thanks, everyone. Stay safe out there, and I will talk to you soon.